brewing. Fullerton Financial Holdings, or FFH, is acquiring a controlling stake in fintech company Lendingkart. FFH is an existing investor in Lendingkart through its affiliate, and this strategic investment aims to revolutionize access to finance for MSMEs across India and solidify Lendingkart's position as a market leader in digital lending.
That's right, Shruti. FFH, a wholly owned independent portfolio company of Singapore-headquartered investment company Temasek, has committed up to a further 252 crore rupees, making it a majority controlling shareholder in Lendingkart. Of course, this is subject to regulatory approval.
Absolutely. And to elaborate on the contours of this acquisition, joining us now is Harshvardhan Lunia, the founder and MD of Lendingkart. Harshvardhan, welcome back to Startup Street. Why are you selling a controlling stake in the company is what we want to know. The investment is expected to have come at a steep valuation discount to the previous round. Was there a cash crisis that necessitated this deal?
Thank you, Shruti and Arundhati, for having me over here. I think it's a momentous occasion for LK. I think we've been growing, and we've been growing phenomenally well across last 10 years. We've almost done 20,000 crore worth of loans, 3 lakh plus of loans, and we've done loans in almost 14,000 plus pin codes. Out of 19,000 pin codes in the country. I think the clear idea was from here on, taking LK from $1 billion to $4-5 billion. We, as a board and as a group of management, had identified 3-4 key criteria for ourselves. One was obviously the cost of funds have been high. I think we all know that the rates have been pretty higher for the last 18-24 months. So that was, for us also, the important piece was to have credit rating upgrade overall, because credit ratings that you have in the ecosystem directly impact on cost of funds as well. And secondly, access to capital was another piece as well. Thirdly, we've been thinking about diversification as well. We've been a single product company for far too long. We've been serving MSMEs with unsecured business loan only as a product, right? And we have built a nationwide distribution where we can reach out to customers, do multiple products to them, serve second, third, and fourth product, right? We've tied up with almost 25 plus co-lenders in the country, and those co-lenders are also suggesting, Harsh, why don't we give, or LK, why doesn't they give the second, third, and fourth product? All of this was under discussions, and I think the plans fit in with FFH plans as well. They have done phenomenally well in India as well. They owned a entity before. They have had a phenomenal exit in that entity, and I think they were also aligned with the MSMEs and our purpose of financial inclusion. So they have partnered with us and gone ahead and given us this additional money to build on it. Obviously, this transaction is subject to regulatory approval and sufficient.
Absolutely. So you've listed out a number of key reasons there as to why you've gone through with this deal. But I have to ask you, you were last valued at about $350 million, right? So currently, what is the valuation as per the deal? And what does this acquisition mean for you at Lendingkart? What changes?
So, Arundhati, again, the key question is we are a debt-listed company, SEBI debt-listed company, so we cannot disclose numbers which are not public per se. And I think there's a Mark Twain quote overall, Arundhati, that the Mark Twain, I think he had suggested that the reports of my death are normally exaggerated. So for us also, that's been done before and we'll continue to do after. But I think it's all, just one thing I want to leave it with is that FFH picking up a stake in a company will only do if the company is doing well and they see future in it, right? So I know there's an article that's come out and it's talking about us, but hopefully we'll continue to build for the country, continue to do financial inclusion and everything.
All right, let me also highlight the fact that, RBI's digital lending norms, Harshvardhan, on first loss, default guarantee around co-lending. To what extent did that impact revenues and capital position of Lendingkart? And is this something perhaps that also prompted the deal?
Again, so one question, Shruti, I want to emphasize that there's no difference between the revenues that between the margins that we get in our own business if you do an Onbook or if you do it an Offbook, right? Onbook, basically what happens is on Onbook, you get interest from the customer. Then you pay the cost of funds to your lender, right? Finally, we are an intermediary. We borrow funds either from banks or NBFCs and then further lend it to our customer. So finally, the net interest margin that comes if it's an Onbook customer to the fee that we receive on our co-lending are exactly the same. So I don't know where this thought of revenue difference between an on-book and off-book has started. But technically, if you look at it in both the cases, the net interest margin that we would have earned on keeping the book on our own books or giving the customer to our own books would be exactly the same as we would have earned in a off-book as well. So again, this is one question I need to ask you guys on where did this difference arise from? Because none of us as a co-lender would be doing this business if it was less profitable or not working. Obviously, what happens is in FLDG, we need to commit 5% of our capital on co-lending overall, right? That's the difference. Right. Otherwise, we have to commit a larger capital in our own book. So I think in revenue terms, it's not much difference, Shruti.
Okay. All right. So not much of an impact is what you're saying. But, going back to the deal, how much stake will Fullerton have after this deal? And who are the selling shareholders? Fullerton already has 2 board members on Lendingkarts role, right? So how will the board composition now change post this deal?
So, Andhati, just to share few facts, right? Fullerton started dealing with us. Initial term sheet came in 2017. First funds came from them in 18. They've invested us in 19. They've invested us in 20. And this is the 4th transaction of investment by them. And I think this is a great validation from LK and from their perspective of sticking to the inclusion. This is entirely a primary round. There is no shelling stakeholder. Entire money is going to come to company and we will use for business growth purposes only.
Okay. Harshvardhan, rise in stress in unsecured retail portfolio is visible across banks that have reported earnings so far. Again, how is Lendingkart faring? Also, last November, RBI had raised risk weights for bank lending to NBFCs as well. How has this impacted cost of borrowing? And finally, in 20 seconds, if you could also give us a sense of where you will close this year, what are your current revenues looking like?
Sure. So, Shruti, again, what's happened is that the RBI that increased last year, the weights were increased for consumer lending. Again, we are totally into MSME lending, so we were not touched by that. I think we are doing financial inclusion. So for us, almost 85 to 90% of our lending is priority sector lending. Similarly, almost 75 to 80% of our lending is also covered under credit guarantee scheme of the central government. So for us, there has not been much impact by the regulations. Obviously, the co-lending guidelines and everything that have come, we've been following them prudently. In terms of cost of funds impact, almost all of us have felt cost of funds increased by 175 to 225 basis points. Arundhati, that is also one of the reasons that a lot of us have absorbed that cost, not passed on to the customer and taken a hit on our profitability rather than letting the customer bear the brunt of it. Again, people have asked us questions of comparatively lower profits last year. One of the major reasons, obviously, was the growth of cost of funds in the economy. And I think that's not within our hands, but that's what led to lower profitability last year as well.
Oh, all right, Harshvardhan. Thank you so much for, outlining what this deal means for the company and what you plan to do and how, your revenues are doing as well at this point in time. But we're completely out of time. And thank you so much for joining us on the show today.
Thanks a lot, Andhati. Thanks for hosting me here today.
Absolutely. On that note,
thank you for watching CNBC TV18. For all our top stories and news updates, follow us on our social media platforms.